start, we have two panelists to talk about what to look forward to for small business owners, as well as some of the lessons learned in terms of access to capital. But before we get going, I would like to introduce Sophia Kanan, the Program Director of Women Business Center, to open our session.
Thank you very much, Sui. As Sui mentioned, my name is Sophia Kanan, and I'm the Director for the Women's Business Center at California Capital. And so I just want to welcome all of you to our webinar for today, and thank our presenters as well for being with us to provide such valuable information. I just want to give you a little bit of information about California Capital and the Women's Business Center if you're not already familiar. California Capital is a nonprofit, and we've been around for over 35 years. And California Capital provides primarily small business financing assistance to business owners who normally can't get it from your B of A's, Wells Fargo's, large bank institutions. We are what's considered an alternative lender, but we also provide a lot of technical assistance as we run those financing programs. And the way that we do that is through one-on-one counseling and trainings, webinars, just as you're experiencing today. And the Women's Business Center does just that. So we have business counselors that provide one-on-one counseling at no cost on any type of topic that you feel that you're struggling with or need more information about. Definitely counseling and assistance related to financing, financial projections, getting loan ready, marketing strategies, tax preparation, you name it, we are able to assist you with it. We would like to be a guide for you and a resource for you whenever you feel as though there's a struggle. We also have an array of webinars and workshops that we provide at no cost, all again geared towards small business growth and expansion. And we also have a procurement technical assistance center. So if you're looking to get into government contracting, whether that be on the state, federal, or local level, we have counselors that can assist you with doing that as well. While we are working remotely, we are not in office, all of our counselors are still working every single day and are available via phone, email, Zoom, you name it, they're scheduling appointments. And so I really encourage you, if you'd like to speak with somebody one-on-one, to sign up with us as a client if you haven't already. If you have, feel free to send me an email. You can send Sarah Harding, she's the program manager for California Capital, an email as well, and we'd be happy to connect you with the right people. So I don't want to take up very much time, but I just want to thank everybody for being here. I will add my contact information into the chat. So if you have any questions, if you want to talk a little bit more about counseling, or if you want to learn more about the webinars that we have, or any programs that we might have that might be able to assist you, I would love to talk more with you. So with that, I will hand it back over to Sui so that we can get it started for today. So thank you so much, everybody.
Thanks, Sophia. We're actually right on schedule, and without further ado, I'm going to introduce our first speaker, Bianca Bloomquist, California Policy and Engagement Manager for Small Business Majority, to dive into her crystal ball and give us some tips on, what we can look forward to. And perhaps Bianca can start by telling us a little bit about Small Business Majority. Bianca?
Thank you, Sui. I appreciate the introduction. And thank you, Sophia, for inviting me to participate today. I'm really excited to be here. I would like to tamper folks' expectations. There is no crystal ball that I have that I am looking into. And as I thought about the most important priorities that we have been thinking about when it comes to 2021 at Small Business Majority, I put these all down on paper, and I'm hoping that this can be a discussion for folks. I would prefer not to talk at folks, but if you have questions about what all of the numbers mean, what this means for your business, the business advisors that are on this panel can answer your questions, and I'd be more than happy to explain further. So if at any time you have a question, please do let me know. Okay, I'm going to attempt to share my screen. Let's see if we can do this one time without messing up. Okay. Folks should be able to see that. Can you see the full screen or is it just part of it?
We can see the screen.
Okay, good. Um, okay, there we go. Cool. So again, my name is Bianca. I manage the policy operations for Small Business Majority. And I handle all of the outreach for the Bay Area, the Sacramento region, north of Sacramento, and all the way down to Santa Cruz. It's my job to talk to small business owners one on one, listen to the different issues that they're facing on a local, state, and federal level, frankly, and take those issues to Sacramento and to Washington, D.C., as well as connect those business owners with partners that do all of the great work that California Capital, for instance, does. We are a national nonprofit. I work out of the Sonoma County office, but as I said, advocate for small business owners across the state. What makes our organization a little bit unique is that we engage in third party independent polling and research. This has been incredibly useful during COVID-19 because we've had the ability to ask small business owners directly what they're going through and how what they need from Congress, what they need from their electeds in Sacramento, what they need from each other, what they need from our partners to survive this pandemic. We engage in advocacy. I've let you know a little bit about that in terms of DC and Sacramento. But the education looks just like this, virtual or in person, one-on-one conversations or to a group of small business owners about a whole host of issues. We tend to focus our issues on those macroeconomic things that are affecting small business owners. So primarily navigating the financial services system. So access to capital, predatory lending, the struggle that many women face in getting a loan or getting enough in a loan, and a few others. The second is navigating a very complex healthcare system. Healthcare surprisingly is not getting as much attention these days, despite public health crisis. But believe me, and I'm sure I don't need to tell you that small business owners are still struggling to pay for healthcare, and Small Business Majority is committed to working on those issues. And the third are wealth building options, so free and low cost workplace based retirement programs or wealth building programs. Sorry, you guys, my mom is like, won't stop texting me. Okay, so for today's topic, I want to outline for you the facts, what we know, no crystal ball, but what small business owners are uncertain about. I'm going to make a case for fiscal policy. I'm going to provide some California updates. And then hopefully I will shed some light on what to expect next in 2021 using the information that we have now in 2020. So, Small Business Majority, the third party independent polling and research that we do, essentially 1 in 3 small business owners are not they essentially don't think that they'll be able to last much longer than a few months without help from the federal government. This is felt even more acutely with small business owners, immigrant business owners for whom English isn't their first language. But our survey only asked a question regarding ethnicity. We know through previous polling that these are systemic barriers for small business owners, but in this survey, we know that Black and Latinx business owners are even less optimistic. We did another survey on August 27th, and it shows that the numbers have grown. More folks feel like the future is uncertain than they did back in August. In fact, 1 in 5 small business owners are considering bankruptcy. I was taking a look at another survey from Goldman Sachs, and that found that over half of business owners have stopped paying themselves. If you have participated in a California Capital or Women's Business Center workshop before, you'll know that for other folks, especially those that are self employed, paying yourself or knowing how much to pay yourself is a struggle already before COVID. But we know now with the dire straits that business owners are in, that over half aren't paying themselves at all. 4 in 10 of these workers have begun have been cutting worker wages. They've dipped into personal savings accounts. The Goldman Sachs study doesn't outline this, but I can tell you both anecdotally and through additional research that many small business owners have also been tapping into their retirement accounts. This is not recommended by financial advisors, and it has long lasting impacts on the economy. Almost 30% of the small business owners are pretty certain that if there was a legislative fix to this issue, things would be better. There are obvious term effects to these sentiments. For rent payments, for example, we're facing the threat of a wave of commercial evictions and foreclosures. 8 in 10 small business owners have reported to Small Business Majority that they're having a hard time making their commercial or mortgage payments. This has gone up almost 20% in the last couple months. A few more percentage-wise of these folks that are worried about commercial rent payments and mortgage payments are also business owners of color. Equally troubling, 64% of small businesses and almost 3/4 of Latin-owned businesses are concerned that they'll have to permanently lay off employees. 4 in 10 have begun laying off employees or cutting worker pay, and 6 in 10 have begun to make permanent layoffs. 10% have already done that. Again, a lot of this is predicated on immediate financial relief. Some folks are really concerned about the weather. Obviously, the weather is going to disproportionately impact certain industries. If you own a food and beverage business, I know a lot of small business owners are more worried about the weather than they are of COVID-19, as the weather in some places can make it a lot harder to abide by the social distancing regulations that have been put in place in California to provide outdoor dining services. Just keep in mind that December is a different has a different weight when it comes to industries versus jewelry or apparel companies, for example, as it's Christmas season. I also wanted to highlight the role of childcare in the economy. I've heard some folks of talking about the current recession that we're facing as a women's recession. It's pretty enlightening to know that almost half of working parents are now remote. Almost 65% have had to change some kind of childcare arrangement that they had. And 40% of employers, again, Small Business Majority advocates for small business owners, 40% of employers are concerned that their employees will not fully return because of childcare issues. And California, how this is especially important here in California. We are the third most expensive state to engage in childcare operations. It costs almost $1,500 a month to get childcare. Oh, I'm sorry. I also like to highlight that nearly 20% of those working in the childcare industry are living in poverty. This is especially important as many community development financial institutions, which are close partners of ours and of California Capital, we work to help small business owners provide quality jobs to their workers so that they can more effectively participate in the local economies. And the reason I'm bringing this up is because I would like folks to know that the issue of childcare impacts small business owners and their employees alike. Some nationwide numbers. In October, the US unemployment rate was 6.9%. This is compared to a little less than 3% for California in the beginning of the year. The number of unemployed persons in the US who are actively seeking work fell by 1.5 million. Here in California, there were nearly 40,000 initial unemployment claims. Initial unemployment claims are important because that is a good measure of folks that are newly unemployed. It doesn't quite capture all of the folks that are unemployed. There are 12 million total unemployed people in the United States. And here in California, $107 billion have been paid to out of work Californians since the start of the pandemic. And the reason that I'm bringing all of this up is because I'm trying to make the case for fiscal policy solutions. What is the difference between monetary and fiscal policy? Essentially, fiscal policy is the ability for legislatures to pass bills to help the people that voted for them. So, for example, out of this election, maybe I was too quick to say Biden here. By the way, Small Business Majority is a nonpartisan organization. But Biden or Trump, the executive branch, the president, has broad power to allocate disaster relief money, the disaster relief fund, of which is almost $16 billion, to states. This is really important because California relies on these funds. These are part of the funds that go into paying all of the unemployment benefits that I was talking about in the previous slide. Eric Winograd, I pulled a quote because I thought it was particularly compelling, said the economy is dependent on fiscal support to sustain momentum in the near term and to generate reflation in the longer term. Fiscal policy is the only game in town when it comes to managing the economy. That means that fiscal stimulus is critical to the economic outlook. So when Suyi and Sophia approached me and asked me if I would talk about the economic outlook, I would be remiss if I didn't spend some time talking about the federal stimulus package because our economic outlook weighs very heavily on the federal stimulus package. And it's one place where you as a small business owner and as a citizen can exercise your power and throw around your weight a little bit. And I'd be happy to share with you how you can do that at the end of the presentation. But essentially, almost all Americans want a federal stimulus package to happen. That's according to the Financial Times. There are a whole host of reasons as to why this hasn't happened yet, multiple dynamics happening without pointing the blame. It essentially comes down to Republicans and Democrats being unable to agree on a price. Democrats, unsurprisingly, would like a more expensive relief package to the tune of about $2.2 trillion. And Republicans want a cheaper one, more to the tune of $1.8 million. Both sides so far have conceded somewhat and come down or up respectively, but they still can't agree. The main point of, oh, I was supposed to put a photo here. Shoot, it's not a real presentation unless something goes wrong. So there it is, and that's not even that bad. The main point of the discrepancy in the funds is how much money the federal government is going to pay states like California, and this is will have a direct impact on how small business owners will fare coming out of or continuing through COVID-19. So California specifically, folks might be aware, but earlier this year, California faced a budget shortfall of nearly $55 billion. We had a $21 billion surplus a year ago. So this is a pretty big deal. $55 billion in the hole after $21 billion surplus is a big gap for the California state legislature to fill. Importantly, they included, when they passed the budget a few months ago, a budget trigger. They had to include a budget trigger because they have been unsure if the federal government is going to give aid to the states. They were right in doing that because the federal government has not yet given that aid to the states. And because they haven't yet given aid to the states, the trigger was pulled. And now $11 billion in budget cuts essentially needs to become absorbed by our state economy. A brief breakdown for you: $6.5 billion in deferred spending on schools, almost $3 billion to state employee salaries, and almost $1 billion in funding cuts for public university systems. This is the majority of the budget cuts, but those that are working on healthcare, those that are working in, thankfully, childcare services did not receive as much budget cuts as we folks had feared. But there were a number of initiatives that unfortunately were dropped this year because we didn't have the money to enact them. So what's next? These are the issues that I think small businesses and their advocates will be thinking about, will be talking about, the issues that we'll be working on, and the issues that business owners will be facing. So frankly, small business owners are still concerned about the future of their healthcare. This month, the US Supreme Court is going to hear oral arguments in California v. Texas, which essentially will determine the constitutionality of the Affordable Care Act, aka Obamacare. 74% of all businesses and almost 90% of Black and Latino owned businesses are concerned that the Supreme Court is going to take away healthcare. This is especially important now as folks discuss pre-existing conditions because COVID-19 will be a pre-existing condition. I believe that folks will be talking about the future of work, and here's why. 30% of Californians identified as self-employed at some point in their career. After the federal programs, Paycheck Protection Program and EIDL, after the funds were dispersed and the data was collected, it became very clear how many folks describe themselves as self-employed here in California alone. This is important because self-employed folks don't pay into the same unemployment insurance pool in California, and they're not eligible for many unemployment benefits. But what if you're self-employed and you have been receiving unemployment benefits? Where did those come from? That was a brand new program, the Pandemic Unemployment Assistance. The PUA was a brand new federal program administered by state employment departments to essentially provide unemployment insurance to a whole group of people that otherwise were not eligible to receive benefits. So this includes self-employed folks, sole proprietors, independent contractors, gig workers. All of these folks traditionally are not eligible for unemployment because they don't pay those taxes. This is a small business issue for a number of reasons. I know business owners are contending with the passage of AB 5, which was passed last year. AB 5 essentially makes it more difficult for folks to misclassify actual employees as independent contractors. Frankly, independent contractors are cheaper to hire. They're 30% cheaper than an employee because the employer does not have to pay healthcare, minimum wage benefits, workers' compensation, and deal with, jumping through a bunch of hoops that you have to do when you hire a W-2 employee. This is also an important issue to folks in California, frankly, because UC Santa Cruz found that over 70% of drivers, for example, are people of color and immigrants. What this suggests to us is that this gig worker future, what happens with it will disproportionately impact small business owners of color, women business owners, and other business owners in our constituency. Moreover, this may create a race to the bottom as opposed to a race to the top, as small businesses will find it harder to compete with larger companies like Uber Eats, because small businesses do in fact have to classify their workers as employees, and Uber Eats no longer has to. Neither does Lyft, Postmates, or DoorDash. This was part of the ballot initiatives that came out of the 2020 election, Proposition 22. Fun fact that the folks that were campaigning for Proposition 22, Uber, Lyft, DoorDash, spent $200 million. This was record breaking. That much has never been spent on a ballot initiative in California before. They spent $200 million on their own, putting out advertisements and commercials, telling folks to vote yes on 22. What Proposition 22 did was exempt these companies only from classifying their workers as employees. Again, not having to classify workers as employees means that employers don't have to pay on it workers' compensation, minimum wage, etc. So back to PUA. It's a really fascinating program. It was created by the Federal CARES Act. It applied to a lot of folks. Again, because many folks are ineligible for unemployment benefits, this includes DoorDash employees, Uber drivers, etc. But this is set to end at the end of the year. So what is going to happen with the pandemic unemployment assistance program still remains to be seen. I think it's clear that there do need to be some major updates to our traditional unemployment insurance programs, but we need to take into consideration the risk of racing to the bottom. We need to make sure that the workers in California, their employers are competing to provide quality jobs as opposed to competing to cut labor costs at every corner. And we know at Small Business Majority that that's not what small business owners want to do. Small business owners want to provide quality jobs for their workforce. In fact, many small business owners employ their own family members. The issue is when it simply becomes unaffordable because they cannot compete because the legal protections are not there. So what else is next regarding the future of work? Programs like Cal Savers. These are portable benefits programs that aren't necessarily tied to the employer, but instead tied to the employee, but still utilizes the employer in a really cool way. So Cal Savers, for example, allows employees to contribute to their retirement account through their paycheck. Now, this has nothing to do with the employer, except that the employer facilitates the contributions through your paycheck. Most of us who've had contributions removed from our account before we're even able to see it probably know that it's a lot easier to save this way. So by participating as an employer in CalSavers and opening up an account for free, you can offer your employees the benefit of saving for retirement without it impacting your bottom line at all. These are the kind of super novel programs that small business owners need and deserve, so that when they do come out of this pandemic, they'll be able to provide those quality jobs and continue to compete for talented workers. Also, it's available for self-employed folks. You don't need a social security number to participate in CalSavers, nor do you need a bank account. Rent and mortgage issues are going to be a big deal in this coming up year. I would love for folks to get involved in how they can continue to think creatively about how to address the likely windfall of rent and mortgage issues, both residential and commercial, because any impact on the real estate industry and the housing market has residual impacts throughout the rest of the economy. I encourage small business owners to think creatively about how to participate in a green economy as well. I believe energy will be a big topic next year, believe it or not. How can small business owners participate in a green economy? How can we improve existing programs? And it's California. There are actually a lot of existing programs to better serve small business owners. The Treasury Department, for example has CalCap, Energy Upgrade California. There are a whole host of programs that already exist that small business owners don't know about or don't use. Let's figure out why, and let's take a look at these programs to see if they could have the added benefit of helping small businesses and spurring growth and innovation. I've been telling you about childcare and the economy. It's just a really important issue. Almost all children under the age of 6 have all available parents in the labor force. That's 3 out of 4. That's quite a lot. I bet you it's about that, if not more, in California. Additional responsibilities to employees are a top of mind of small business owners. If you're a small business owner, I'm sure you've thought about this issue. I'm sure you're going to continue thinking about this issue. Essentially, it's tough. The issue of child care remains an issue of private responsibility. meaning that many folks believe that it is not a public good. It's not something that the government needs to be fiddling with, but instead it's something that folks should get from their employers. We've seen how this works with healthcare. That's really difficult, especially for small business owners to compete. They're not able to offer child care benefits to their workforce because they don't have the economy of scale that larger companies do. So we need to think creatively about how we're going to address the child care issue in California. Also, child care deserts. There is a lot in California, and they're actually not far from where we all are. But they're pretty prevalent around the United States as well, where folks not only don't have access to quality childcare, but any childcare at all. So if we're going to talk about the future of work and what to expect for the economic outlook of 2021, then childcare needs to be a part of that conversation. Here are a few different ways that you can get involved in our network. I would love to hear from you. If you have any thoughts about this presentation or how to get involved, we are always looking for small business owners to speak to the media. We elevate your voice, you get connected to a reporter, because frankly, reporters don't care what I have to say. They don't want to hear from me. They want to hear from you, the business owner. So it's my job to make that happen. So if you're interested in those opportunities, let me know. Thank you.
Thanks a lot, Bianca. That was a very interesting conversation, and I take it back that it wasn't a crystal ball, but I think with all the information that was presented, I see a lot of opportunities, even though there are challenges with with the economy in terms of um, savings, the independent worker. I do know that the Prop 22 was overwhelmingly passed, supposedly in favor of the independent workers. But like you said, it's a race to the bottom, and the majority of those independent employees or workers are actually the minority folks. And it's our job to really present opportunities for them, which I think the CalSaver is a very much useful program, but very much unknown to folks. And so I think it's also our responsibility to continue to educate the independent workers on the different programs that are made available for them. And the opportunities that I see in terms of the points that you made in your presentation is to think creatively as to how we can solve the childcare problem, the healthcare problem, as well as the green economy. And if there are any attendees in the audience that have been able to think creatively to solve any of those issues, please type your information on chat, and we'll come to address your input later on. But I wanted to bring on our next panelist, Bronia Leong of East West Bank. She has over 30 years of experience in the banking industry. Access to capital will remain a very important issue for all small business owners, whether it's pre-pandemic, during the pandemic, or even post-pandemic. How are we going to rebuild our buffer system once we have, exhausted all our savings? And we just hear from Bianca that business owners are having to dip into their 401k to pay their employees. And so without further delay, I would like to bring on Bronia.
All right, thank you so much, Sui, and good afternoon, everyone. Welcome everyone to today's working group, and thank you, California Capital, for having me. My name is Bronia Leong, working with East West Bank. I'm in the SBA lending department. I support all our 26 branches in Northern California. In fact, we got a branch in Sacramento area. So it has been 8 months into the pandemic, and I think everyone would agree with me. Our life turned upside down. We have been impacted by the pandemic, but at the same time, we learned something new in the past 8 months. So I don't know about you. For me, I learned some new skills, like how to plant tomato in my backyard in San Francisco. And then I know it never turned red because San Francisco is too cold. So we do learn something in the past 8 months. And today I wanted to share with you guys based on my observations and also my experience working with small business owners in the past few months. I wanted to share a few lessons learned as business owners. And also, I want to share a few tips to prepare you guys to have a better chance of accessing capital during or post-pandemic. Okay, so let me share my screen. Okay, can anyone see my screen?
I can see it.
Okay, wonderful. All right, if I ask you, how do you describe 2020? So what adjective you will use? So too bad we're not like meeting in person. Otherwise, I will ask you to just voice out, right? What is the adjective that you're going to describe 2020? So I think we heard many people talk about 2020 is unprecedented. So in fact, it's really an unprecedented year. I think we experienced a lot of things, a lot of new things that we never experienced before, like as a banker, right? So now, if you don't wear a mask, your bank will not give you money. This is, it's pretty bizarre, right? We never happened before. If you wear a mask in the past, well, we probably our banker would just press on the bell. So this things just happen like this, right? In the last few months, all the things turn upside down, and we are facing many challenges that we never faced before. So, what is your biggest challenge as a business owner? So I know Bianca just now talked about childcare, and well, as parents, you may now, instead of cooking one meal, you have to cook 3 meals a day, in between snacks, or you have to make sure your young kids, they know how to attend classes using online platform, make sure they don't get bored. There's so many challenges. But as a business owner, what is your challenge? So from March still at this point, I roughly received about 118 leads from my Northern California branches. And out of that 118, about 42 of them submit the entire financial package for us to review and see whether it's a workable deal. I can tell you, out of that 42 financial packages, 32 get declined because of the same reason, which is insufficient cash flow. So it is 76%. What does that mean? So when we, lender, look at the financial package, the most important thing is to see, how are you going to repay my loan, right? And 76% of the client that they submit the package, they don't qualify because they don't have sufficient cash flow. So what does that tell us? So next one, I want to share the first lesson learned that for a business owner, keep a cash buffer, okay? So work very hard to manage your business, and then make sure you keep a sizable amount of cash in your account. So the cash is important to keep your business going if there is any emergency or like a global pandemic, right? So you can use the funds to keep your people or even hire some new talents, and also keep your business running without any interruptions. So by my experience working with the business owner and also my observation, right? The first lesson learned is make sure your business keeps some cash buffer. The second thing that I learned from the past couple months from my leads is make sure your business stay nimble. So meaning you stay flexible, okay? You have to adapt to changes. There's so many new normals now, right? So the daily life has been changed so much. Your customer cannot come in person to work with you, to order from you, right? So what do you do if this is the case? If you don't move quickly, you will lose all those business opportunities. So give you an example. We have a customer, actually in the Sacramento area, it's a restaurant. So back in May, so it's already during pandemic. So she came to us and tried to look for a business expansion, second location. Restaurant, even before pandemic, is a high risk business in the eyes from the lender. But we were able to help her. We fund the loan sometimes in July. She looking for purchase a property for her second location. So why we could do that for her? Her restaurant is the type of restaurant that not a lot of dial-in service. So she doesn't have a lot of tables in the restaurant. She does a lot of takeouts. So she leveraged the opportunity because of the pandemic. She enhanced her delivery service. She brought a new van. She hired another driver. She expanded the delivery area. So that's why it kept her successful. She was closed for a short time, about a month and a half, right after SIP. But then she reopened after about 1.5 months. But she was able to manage to increase her revenue by 20% during the toughest month. And we were able to finance her because she was able to move fast, adapt to the changes, adapt to the new normal. That customer cannot come to her, and she reach out to them by enhancing the delivery service. So this is the second lesson learned. Stay nimble, stay flexible, move quickly, be adaptive. The next one is use technology. So when traditional way of doing business got a lot of restrictions because of the pandemic, right? If it doesn't work anymore, again, it stopped your customer to coming to you. It's very important that you will use technology to reaching out. I have another client. She doing a monument service, so provide those tombstones to client. She is kind of like traditional type of business person, using a lot of interactions with customer in person, but because of the pandemic, again, customer could not come to her. So she quickly put together a website and ask customer to order the stone using the website. So again, it enable her to maintain the revenue level even during the pandemic time. So as go back to restaurant, right? So as restaurant, you can also leverage the online channel, work with, like Bianca mentioned those names, right? Like Uber Eats, DoorDash, make sure you develop the connections with all these online delivery service apps so that they would help you to reach out to your client. So, well, I'm sure, all of us have different lessons learned, but I would like to highlight these three. So again, the first one is keep, some cash for your business so that, you can use it as emergency fund. Number two, make sure you will stay nimble, stay flexible, and move quickly. adapt to changes. And number three, use technology to provide more channels to do business with your client. So next one, I'm going to share some tips. How do you have a better, how can you have a better opportunity to access capital, access financial support from a lender during or after the pandemic? So here just a slide to suggest some ways, a roadmap, how you start the business recovery. So there's 3 steps, right? Reflect, restart, and revitalize. So for reflect, so first you have to look at what has worked before. Well, what has worked before, it doesn't mean now it worked, but you will see at least which one will be effective and which way you're really proud of when you doing business. So first, evaluate, right? And then you also have to look at what has been learned. So we quickly went over just now, right? So during the pandemic, what have you learned and what needs to change so that the things that it worked before, it continue to work? Or if it doesn't work because of the pandemic new normal, what adjustment you need to make in order to make it work? So what happened or what impact to your workers and what impacts on your competitors? So you need to figure out, you need to find out. And next step, when you get ready to restart, right? So what are the steps? You have to lay out a plan, how to restart your business. When can you fully open, right? If you cannot open, what can you do? If your restaurant business, should you set up a booth out at the pedestrian, outdoor dining? You have to figure out the steps. What are critical for you to restart? So what kind of talent you need to pull in to help you restart? And how will you comply with COVID restrictions? So you have to lay out a restart, reopening plan. Revitalize. Even COVID has impact on every one of us. Some bad, but some good, right? Just like what I shared with you, the example about my restaurant client. She increased her revenue by 20% because she enhanced her delivery service. So you also have to evaluate how COVID will give you some new opportunities. And how overall for your industry, right? How COVID impact your overall reputation, right? If you're a restaurant, how the overall market will perceive eating at a restaurant. If you're a hotel, right? How the overall travel plan will impact your business. And then how can you better optimize your supply chain? Who are your suppliers? If they're overseas or they're local, right? Or you want to expand your network so that you can have a better chance to have less disruptions or during the pandemic time, right? Or prepare for the next emergency that oh, I have all these resources lined up, even though this area may not work, I have the other supplier to continue to supply to me. So this kind of things that will help you mentally and to start to reopen your business or recover your business. So next, I'm going to share with you 5 C's in lending. It also help you prepare your business to access capital. Well, 5 C's, the purpose of it is to help the lender to gauge, right? How we make the loan decisions by gauging the credit worthiness of the borrowers. So when we go to the 5C, the first one is cash flow, the big C. Okay, this is the most important criteria when a bank try to gauge whether we think the loan is doable or not, the application is workable or not. Cash flow, of course, we have to look at your tax return, right? So, and this is how we evaluate whether a borrower is able to repay a loan. By far, this is the most important C among the 5 C's. But it will say, hey, if my cash flow is very tight, then does it mean I'm unable to get financing from the bank? Well, we say there are 5 C, right? Even though cash flow is the most important C, but the lender will also evaluate, other mitigating factors, even though you may not have a very strong cash flow. So the other 4 C's will come into the picture to help the lender to evaluate your credit worthiness. So the second one is character, which is your credit history. Each bank, they should have their requirement, and usually for SBA loans, we're talking about like around 660 FICO score for your to evaluate your credit. So I would suggest you should look at your credit from time to time, generate a credit report, and each year we get a free credit report. So I include a website here. So you should make sure you understand where you are at in terms of your credit score. And if there are any derogative records, you have to make sure you know what they are. And many years ago, I have, when I look at some of our clients' credit report, there's small amount, like some co-payment, probably forgot about it back in 4 or 5 years, but it's on your record, right? So you should take care of it right away so that it can be removed from your record. But for sure, the lender will look at your credit report before they make the credit decision. So this third C is capital. So capital means how much you will be willing to put in the investment, whether you want to buy property for your business, or you want to remodel your business location, or you see opportunities to purchase another competitor, you buy their business, how much you're willing to put in. Usually for small business loan, for SBA loan, will require at least 10% of your investment. So the more capital you will inject into the transactions, so through the lender, that means you're more commit, okay? So we will also look at how much you will inject. The next one is collateral. So whether you have a hard collateral to secure the loan is also important. So if you have a residential property, if you are able or you're willing to collateralize that property, so it will give you a better chance to get a financing for your business. And the last C is capability. So this is your experience. If you have the relevant experience in the industry you're in, then for sure, it's very helpful. But if you are you try to start a new business, you already have a restaurant, but now you have passion, want to open a bakery, for example. So the lender will make sure you have the relevant experience. If you just tell the lender, oh, I'm just good at baking and I love baking, I have passion in baking, it may not help you get the financing if you don't have the direct experience running that business. Okay, so go back. The 5C again. First one, your cash flow. Okay, so we have to look at your existing business, how it shows the ability to repay the loan, your credit history, whether you get a credit score that 660 above, and no serious derogative records. So you show you have the commitment, you show that you're willing to inject your money into the business, and you have a hard collateral to secure the loan, and you have the relevant experience that it will help you to access the capital in more relevant way. Okay, so with this, Zoe, I will turn it back to you, and I know we do have some Q&A time, right?
Yeah, we do, Bronia. Thank you for the presentation. There is a comment on the chat that I would like to bring up. And Sheila said that wanted to mention if you take care of any derogatory item on your credit report, it will remain on the credit report if you do not negotiate for it to be taken off. And if you do not remove it and it is paid, does not harm chances for a loan. So is paid collection not a good look? I'm not sure.
Well, usually the derogative records will stay on your credit report for 7 years, except for like bankruptcy. It will be there for longer time. But if for some derogative, 7 years, they will be removed anyways. But if you're, this question, if you do not negotiate, well, you have to show it to the lender. Why, right? If you, let's say, if you think I was unreasonably charged, that's why, I don't want to pay because it's not reasonable. At least you have to explain, in writing to the lender why you think it's a mistake. Do you have any paperwork to show that you already sent letter to the to that company complaining about the charge? So if you have all these backup supporting document, the lender may accept it. Okay.
Okay, thank you for that. I think when it comes to applying for whether it's access to capital or any types of, in our small business counseling, we work with a lot of small business owners that would like to get certified with minority business certifications. I always use the term, if you can't explain anything in words, always, you can't justify why you're not able to produce this document. Always write a letter of explanation. I think that would serve the purpose of explaining any discrepancy that you have in your record, or at least in your business operation. And with that, I would like to open up the floor to any attendees here who have specific questions to the presenters, or if they would like to share have any input, if they were to work with a lot of small business owners and they have specific input that they would like to share with Bianca or with East West Bank, by all means, raise your hand and we'll unmute your mic. And while you think about the question that you want to ask, I would also like to mention that East West Bank and many other traditional banks usually administer the SBA loans. And for a lot of folks that traditionally do not qualify for SBA loans, I also wanted to bring to your attention that California Capital Financial Development Corporation is actually a CDFI, Community Development Community Development Financial Corporation that actually work with a lot of startups to provide the bridge capital. And I would like Deborah Muramoto, who is our CEO, to talk about our lending program, because that's the core of what California Capital is all about. Debbie?
Mute. Hi, everybody. Thank you all for attending today. And Suyi, thank you for inviting me to say a few words about our lending programs. As Suyi mentioned, California Capital Financial Development Corporation is a community development financial institution whose purpose and goal is to ensure that communities of color and low-income community and disadvantaged communities, veterans, LGBTQ businesses, very small businesses have the access to capital that they need to start or grow their business. Now, what that means is all of the things that you learned today from Bianca and Brianna is very, very important. California Capital has a number of different lending programs that could be of assistance to you in your goal of seeking access to capital. We have a couple of micro lending programs. We have a Jumpstart micro lending program that is for loans from $500 to $10,000. We have other funds to lend that are also up to $10,000. We are an EDA revolving loan fund where we can lend up to $150,000. I don't want to take a lot of time today to get into all of the eligibility requirements and the application requirements, but if you would put your name and email address into the chat, if you're interested in finding out more about our lending programs, please put your name and email address in the chat, and somebody on our lending team will be in touch with you. If you could include the nature of your business and the amount of capital that you might be looking for, that would be very helpful. In addition to the microloan programs that I spoke about, California Capital also administers the state of California's loan guarantee program, where we will guarantee a bank loan up to 80%. And those loans can go as high as $20 million. But the maximum guarantee would be $1 million. So sometimes it's a little bit difficult to understand. That's why I'm asking you to please reach out to us so we can give you more information, learn more about your business and your needs, and we can help you to identify which lending product your business would fit into. So with that, I'll turn it back over to Suyi. Thank you, Suyi and Sophia, and to our speakers today for joining us.
Thanks, Debbie. And I do want to offer one more resources, and we're still fielding phone call. We're still fielding questions or chat. And if you have any input, suggestions, please raise your hand and we'll unmute your mic so that you can ask your question directly. Remember, this is a small business working group. This is your chance to really network and, for lack of better word, put yourself out there for other businesses to get to know you and for us to get to know you. And maybe we could offer you some input and advice as to how we could provide any assistance. And again, we are a resource center. I do want to bring Sophia back on to talk about the women business marketplace, online marketplace. And if you're thinking about expanding your business base to online folks, our California Capital WBC does offer a free online marketplace portal. Sophia?
Thank you, Suyi. Yeah, this is a really great opportunity and a great time to talk about this. We understand that businesses are doing absolutely everything that they can to pivot, and any exposure or additional form of marketing that you can participate in is something that we encourage you to do. And through our website, which is cacapital.org, let me see if I can share my screen right quick. Um, okay, can everyone see our website on the screen?
Yes.
Okay, awesome. So this is our website, cacapital.org. And here is where you're going to find all of the resources that we have spoke about. The business loan assistance that Debbie was talking about a moment ago. If you're interested in learning more or finding more details about our loan programs, they're going to be under business loans. Business assistance is where the Women's Business Center is. You can sign up to become a client if you haven't already done that. We have government contracting services. So rather than give you a tour of the website, if you go back under business assistance and click on California Capital Women's Business Center Marketplace, it'll take you here and give you some information about what exactly it is, how it works. And so if you'd like to view it, this is what it looks like. You create a profile. It is free to sign up. The platform right now is for women business owners only. We are working very hard to try to expand this platform to include all business owners. As of right now, it is for women business owners. So if you are interested in creating a platform or a profile here, I see some familiar names, so that makes me really excited. Please feel free to do that. And if you have any other questions about, how it works after you've gone through the website to learn a little bit more, definitely feel free to reach out to me. It is an opportunity for you it's a way for you to market your business. And if you don't already have a platform that you are marketing your business through, if it's maybe just through social media, if you haven't quite gotten to build a website, this is a really great place to be so that at least you can point people in the direction of your business so that they can contact you, they can find your products, your services. And again, there's no cost. So if you have any questions, definitely feel free to reach out to me. And again, it's on our website, cacapital.org, under business assistance. And I will stop sharing my screen. And back to you, Steve.
Thanks, Sophia. If any of you need assistance to, create your profile and kind of put your products or services online, definitely, feel free to schedule an appointment with us. It shouldn't take more than an hour of your time. The most difficult part is always to, take the first step to create that profile, register for an account, navigate the different pages within the portal. We'll be more than happy to hold your hand and walk you through that process. We do have a question from one of the attendees. Thank you for Kalpesh Shah. Thank you for all the information. I'm curious, in your respective experiences in 2020, what level commitment of business planning are you seeing from your small business owners? None, 1 year, 3 year, or etc. Verbal or documented plans. Thank you. Maybe that's a question for Bronya.
Yes. Yes, I'm more than happy to answer this question. Well, as a new requirement, so I'm talking on behalf of SBA lending. So as a new requirement, SBA required the lender to request an 18-month business plan from the borrower. So the borrower has to let the lender know, what will be the business outlook, what is your contingency plan to go back to profitability in the next 18 months. So this is directly related to COVID-19. But on a regular basis, so as a bank, usually we will request business to provide a 2-year business plan, particularly if you are a startup, you want to start a new business, or you want to expand to a second location. So the lender usually will ask you for 2 years business plan written in writing, and also with 2-year financial projections. Okay, so in the next 2 years, if you want to build this business or you want to expand to a second location, so what is the income, what is the expense, what is the profitability that you would project for the next 2 years with assumptions. So going back to the restaurant example, right? Because I know some of the attendees here are restaurant owners. So you have to boil down to very details, like I open for 8 hours per day or 10 hours per day, right? And then about lunchtime, how many customer I would project to come in, and the average ticket size is $30, right? So you will times that number and give a projected number. And dinner, how many tables and what is the average ticket? So you have to give this kind of details level, so that the lender, you will convince the lender, you really know your stuff, right? You really know your business, you have an experience running that industry. Okay? I hope I answer your question. If not, let me know.
Yes, Cal, we hope the question was answered. And if you need to further elaborate on your question, by all means, raise your hand or type your question in the chat. I don't see anything else coming through, and I do want to, respect everybody's time, even though it's scheduled for an hour and a half. If we could have 10 more minutes back on our schedule, we want to honor that. And I do want to thank Bianca and Bronia for taking the time to prepare a presentation. I do know that it takes a lot of time to prepare something along that line and to share the information with our small business owners. And we'll get the presentation slide to all those who attend the webinar today. And should you need to continue a dialogue with us or to reach out to Bronia or Bianca or even California Capital, you have our email address, and we'll be more than happy to facilitate that connection. And Sophia, would you like to end the webinar before we close it?
Well, thank you, Suyi. Sure. Again, I just want to reiterate what Suyi said, and please feel free to reach out to us with any questions you might have. And we are here as a resource in any capacity that you need. And if we can't answer your question, we will find a way to answer your question. So again, always think of us as a resource. Feel free to reach out. And thank you, everybody, for spending your afternoon with us. We greatly appreciate it. And thank you very much to our presenters today. We very, very, very much appreciate you and the information that you were able to give today. And with that, oh, no problem. Go ahead, Bianca.
I was just saying thank you.
No problem. Thank you, Bianca. Thank you, Broina. Thank you, Suyi. Thank you to everybody on the call, and have a great rest of your day.
Thank you, everybody. Have a good one.
Thank you. Bye-bye.
Bye-bye.